Hi everybody, HFR President Ken Heinz here with the HFR 500 July 22 Performance Snapshot. July was an exciting month. We saw a reversal of most of the trends that have dominated recent hedge fund performance in June and for the second quarter and for the most part of the first half of the year. Even though the U.S. economy entered into a technical recession with GDP contracting in the second quarter and the Federal Reserve raised interest rates, hedge funds posted gains for the month as you saw a strong and powerful risk on sentiment dominate equity markets, and you saw bond yields fall despite the fact that inflation remains at generational highs. Despite the fact that macro strategies pulled back a little bit in the month of July, they still remain the top performers for the overall year for the first 7 months of the year. And we've used this slide in the past few webinars, so I just updated it for July. You can see the top performing area in the macro and commodity space is the HFR 500 Macro Commodity Index, which is a gain of over 37%, and that's through July of this year. We can see that commodities like oil, even though it fell in June and July, still up 15.6% for the year. CTA strategies, trend following strategies, are up about 14.8% in the first 7 months of the year. The overall HFRI 500 macro up 11.78%, and you had a gain of about 6.2% for the macro multi-strategy index and 4.5% for the macro currency index. Everything else is declined, but you can see the overall composite, which includes all four main hedge fund strategies, narrowed its year-to-date decline to about 2.7%. Taking a closer look at July performance, you can see that obviously when the risk-on sentiment really manifested itself, you had a gain of about 9.1% for U.S. equities as represented here by the S&P 500. Hedge fund performance was pretty strong throughout the month. You can see that was led by the equity hedge index, which gained 3.25%, and event-driven also did very well with a gain of 237. Fixed income-based relative value gained 1.5% as bond yields fell despite the fact that the Federal Reserve raised interest rates and inflation has remained at generational highs through July, and the overall composite posted a gain of about 1.3%. As I mentioned earlier, we did see a small decline in the macro strategies, which you know have been the strongest areas of performance thus far for the year, where those declined about 1.5%. We're going to talk a little bit about that in the next slide. That was really as a result of a negative performance from the quantitative trend following CTA strategies. Taking a closer look at July performance and focusing in the top areas of sub-strategy performance, again here, strong risk-on environment, U.S. equities up 9.1%. We had about a 4.5% gain for the HFR 500 event-driven activist index, nearly the same for equity hedge fundamental growth. And those are areas that do really well when risk on sentiment is very powerful, which has not been the case certainly in June and for the most of the second quarter. A gain of 435 for the equity hedge multi-strategy index, which is very similar to the fundamental growth index, but it can have other quantitative, market neutral, technology, and value all in combined into the multi-strategy. And then lastly, we have HFR 500 relative value fixed income asset backed index, which gained 3.6% for the month of July. Taking a slightly longer view of time and looking at the full year performance, the first 7 months of 2022, you see that overall performance has been led by the macro index. Even though it declined in July, you still have a gain of about 11.78% for the macro index. And you can see here that compares very favorably with the S&P 500, which declined about 13.3% even after the gain for the month of July of 9%, still down pretty sharply for the year. And obviously the NASDAQ down even more sharply than that, but those have recovered in July and the first part of August. Other area of positive hedge fund performance is fixed income based relative value strategies. These gained about 0.8% or 83 basis points thus for the first 7 months of the year. These have been very resilient to the interest rate increases that the Federal Reserve has done, and the higher inflation rate, the higher generational inflation that we have seen. As you know, relative value is really a lot of the fixed income multi-strategy, where they're long and short a fixed income instrument, or long a fixed income and short some other part of the capital structure. So those are very well protected from the interest rate sensitivity that long bond portfolios have. As I mentioned earlier, the overall composite, including all 4 of these strategies, narrowed its year-to-date decline to about 2.69%. And the higher beta strategies, which are the strongest area of performance in July, event-driven for the year, has declined 6.9%, and overall equity hedge down 9.6%. And you can see those still ahead of the S&P 500 for the year. I talked on the earlier slide about how some of the strongest performance for the year to date is still in the macro strategy area, and that the macro commodity index, and this index also gained in July when some other macro strategies actually fell. So we have a gain of 37.15% in the macro commodity index, and these are mostly fundamental trading and positioning in oil and other commodities, mostly in the energy and metals space, some in the agriculturals as well. But again, strong gain there in the fundamental discretionary macro commodity index. 14.8% in the macro systematic diversified index. These are different, obviously, from the first category. These are quantitative, trend-following strategies that trade in liquid instruments across all different asset classes. And again, these actually declined in the month of July, but for the full year, you see a gain of 14.77. Relative value volatility, we've had plenty of that, mostly in the first half of the year, not so much in the month of July, but these strategies can make money regardless of the direction the market moves, because even when you have sharp upward movements, volatility managers can make money trading gamma. So those gained 13.6%. And then the fourth best area of performance in the first 7 months of the year, equity hedge, energy-based materials. This has been really the rock star performer in the past 2 years, going all the way back to April of 2020, thus far in the first 7 months of the year, gain of 10.25%. These have been very strong performers, and obviously that shows very favorably versus the decline in the first 7 months of the year of 13.33% of the S&P 500. There's a lot of great information on the Investable HFR 500 index on our website. Please feel free to visit the www.hfr.com. When you do get there, please go to the Investor Guidebook. You can download that and review that. That really talks a lot about how the HFR 500 is used by leading institutions globally as a solution to common benchmarking challenges that they find. There's also a video there that you could see on the HFR 500 that talks a lot about a lot of these same trends. Obviously, if you're watching this video, you know we do regular performance updates on YouTube, so please continue to look there for those videos, and also subscribe to the channel and give us feedback too, because as we're answering a lot of questions that we think you have, it's always better to hear directly from the people that are viewing the videos to see if there's other areas that we could provide more detail on that would be useful and informative in understanding the HFR 500 performance and hedge fund performance or all. Certainly reach out to me if you have questions. I can be reached at my email address or indices at HFR. You can reach out to your local HFR representative that you're working with on any of our data or index products, or certainly send an email to HFR500@hfr.com. HFR is also super excited to let everybody know, and I've mentioned this in a few of these videos, that we now have a tracking fund for the HFR 500. That fund was launched July 1st. It's operated by Aberdeen. And if you have any questions or would like to hear more about that, please feel free to reach out to me. I look forward to hearing from you. And thanks for watching the video, and look forward to speaking with you next month.